This week, Bill Pulte, the head of the Federal Housing Finance Agency, floated a pretty big idea. A 50-year mortgage is a way to help first-time home buyers afford a home. Is that actually a good idea? Well, let's break it down. First, the rate. Longer-term loans almost always come with a higher interest rate. A 30-year loan usually runs about 0.5% higher than a 15-year. So if we follow that pattern, a 50-year mortgage would probably be about 0.5% higher than today's 30-year rate. Now let's put some numbers behind it. In Seattle, the median single-family home sells for about $950,000. With a 20% down payment, that gives you a loan of $760,000. On that loan amount, stretching the term from 30 years to 50 years would lower your monthly payment by $241. And in terms of buying power, that reduction translates to roughly $41,000 of additional room in the budget. But here's where things get interesting. If you look at the total interest paid over the life of the loan, the numbers change dramatically. A 15-year mortgage would cost you about $385,000 in interest if you kept it all the way to the end. A 30-year mortgage, about $947,000 in interest. But a 50-year mortgage would cost almost $2 million in interest. So the question becomes, are you willing to spend nearly $1 million extra in interest just to save $241 a month? Now, there are ways to tackle affordability that don't involve tacking on 2 more decades of payments. One idea is simply lowering rates. Right now, 72% of homeowners have a mortgage rate under 4%. That's a huge reason that inventory is so tight, because who wants to give up a rate that low? Freddie Mac actually studied this and found that for every 1% drop in market rates, 17% of those homeowners become willing to sell. More people selling means more inventory, and more inventory takes pressure off of home prices. Another idea, remove some of the bureaucracy around building. In Washington state, for example, almost a third of the price of a new home goes into regulatory costs. Smoother, faster processes would mean more homes get built and at lower prices. And here's one more, modernizing lending rules around ADUs, accessory dwelling units. Washington state allows multiple ADUs on a lot, but lenders only allow one. If that rule were updated, buyers could qualify using more rental income from their property, and that change alone could make a big difference. So I'm glad that affordability is being talked about. That part is great. But a 50-year mortgage, I don't know. I'm not sure that that's the solution. I'd love to hear what you think. Would you ever take a 50-year mortgage? Well, be sure to follow me so you can learn more about mortgages and mortgage rates and what they're doing and why. We'll talk to you soon.